This is the US interest rates. Last week, we had interest rate announcements from the Federal Reserve and the FOMC. It was left unchanged at 5.5%, which was, of course, a hawkish stance by the Federal Reserve and the FOMC because of the inflation rates being higher than anticipated and expected. Right now, the dollar has a bullish sentiment. Starting out the year, we had a divergence between the 5-year bond yield and the 10-year bond yield, and we've had higher prices ever since January all the way to April, and even right now we are still bullish because we're still maintaining that bullish structure. No major level has been broken to turn the trend around. Whenever there's a crack in correlation between two correlated assets like the bond yields and the dollar, pay attention, something interesting is about to happen. If you look over here, you see that we made a low here. We also registered a low on the DXY. However, we made a lower low here on the 5-year bond yield, but we made a higher low on the DXY. Now that is a crack in correlation. That is a diversion. This is a sign that we might be turning around very soon. The US 5-year bond yields have been spot on this year. It has been almost perfect. I expect this seasonality to kick in the coming weeks. Before we come to the close of June, we've basically made 3 drives. This 3 drive pattern is a very important exhaustion pattern that I use. The trend has been bullish since the tap into this other block happened. Since we printed this divergence going into the end of June, we've been having higher prices on the DXY and lower prices on the euro. Now this is where we find ourselves currently. We're bullish from the interest rates. We're bullish because of the bond yield. We're also bullish because of the seasonality of the bond yield. We are bullish on the DXY as well. We have this divergence between the DXY and the euro. A lot of confluences saying we should be going higher, right? However, after this push, I expect a retracement. So going into next week, even though I'm bullish overall, I would be looking to sell the dollar up until we get to this other block. Remember this 3 drive pattern: 1, 2, 3, and then we broke structure, tapped into this other block, and then we've been falling ever since this year started. We have another divergence here between the Eurusd and the Gbpusd, and we've come right back into that other block for the second time, and then we printed a divergence between the Gbpusd and Eurusd, another divergence. So we've been having a lot of confluences pointing to lower prices on the Eurusd, tying in very well with higher prices on the DXY and lower prices on the pound USD. If you know what my bias is for the week, you look for your own entry signals by yourself and take those trades of your own volition, and then we pushed right back down into this other block right here, and then since then we'll be making higher prices until we hit this other block. So we have the 3 drive pattern, we tap into another block, we have a divergence with Eurusd, and we broke structure. That is perfect recipe for a very good impulse to the downside. On Thursday we have the official bank rate. Quite frankly, I expect the Bank of England and the MPC, the Monetary Policy Committee, to drop interest rates. Seeing as the Eurozone has dropped their interest rates, I do not expect the pound to hold interest rates going into next week. My bias for the pound is bullish until we get into this candle and then look for some bearish signals. My bias for the euro is bullish until this other block, look for some bearish signals, then to go bearish. My bias for the DXY, bearish until we get into this other block, and then we look for some signals to go bullish to continue that trend. And I look to see how we turn around and have some exhaustion signals or divergences going into next week on the bond yield.
Hello guys, welcome back to my YouTube channel. It's good to see you again. I hope it has been a good week so far. This review was supposed to come a lot earlier. I was supposed to make this review on Wednesday. However, because of the bank holiday in the US, the price action from Monday to Wednesday was not significant enough for any kind of update. I wanted to see something significant so that the update would make sense, if you get what I mean. And the second reason is today the Monetary Policy Committee announced the official bank rate of the pound. I wanted to see exactly what the change would be, if there would be any change. Surprisingly, there was no change, so that's quite interesting. And this means that the Bank of England and the MPC are taking a hawkish stance to fight inflation, right? So we still have unemployment claims for the dollar later today. We'll see how that goes, and we have a lot of high impact events tomorrow being Friday. So let's look at the kind of price action we've had this week. Starting out this week, during our weekly outlook, I expected to see a retracement down into this other block. Now we've had a retracement quite alright, but definitely not up to this other block at this point. Today is Thursday, and we have just today and one more day to close out the week. Now, do I still expect price to come all the way down into this other block? First of all, there was one thing I omitted, one thing I overlooked when I was doing my market outlook, and this is, I'll turn this into a teachable moment. It's something, was a mistake on my side. I did not take note of it. It's very, very important. Now, we've been bullish, like I said, on the DXY since we turned around here, had this divergence and started going up, right? So we've been bullish. I expected a retracement after taking out this high and this high in succession last week. Now a retracement is expected, but the magnitude of the retracement is determined by the kind of exhaustive price action we have after we take out a certain level. Now, I did not see a significant exhaustion pattern around this high to warrant this much of a retracement, right? Is this still possible? Yes. Do I think it will happen? Probably. Am I going to hold on to these buyers very firmly? No. this high might be challenged before we come down here. Now, this high must not be taken out. We can pull back close to this high, not take it out, but then have a divergence on another currency pair, for instance the pound, which is what I expect to happen, but we'll see how that goes before we look forward to this kind of deep retracement. So that's one thing I want to point out. That's one of the things I omitted in the outlook. You should take note of that. By exhaustive patterns, I mean 3 drive, swing high, or a swing point, high or low, it doesn't matter, but in this case, a swing high, or a significant divergence between this pair, being the DXY, and a correlated pair like EURUSD or the GBPUSD. None of that was present. There was no 3 drive pattern, there was no significant divergence, and definitely no swing high before I anticipated this. So I was a bit hasty in my anticipation for this deep retracement. So going forward, we'll see how we close out the week, and then we'll look at it again and determine exactly what direction price is going to take. So that's where I stand for the DXY, and of course my stance will be very, very similar for the EURUSD, as they are very, very tightly correlated. Now, same thing, I would like to see the euro fail to take out this low after pound, which we'll look at very soon, takes out that low and gives us that divergence, and then I would look for a deeper retracement. But until then, we have to watch and see what price tells us after the week closes. Now, this is the pound, right? This is what I was talking about. The pound has made it to this candle. If you remember very well, I pointed out to this candle. I said we should get into this candle before we continue this bearish move. Now, as much as we have gotten into this candle, I still wanted a much deeper retracement before this bearish move. Seeing as we are right now, taking out this low without a corresponding lower low on the EURUSD or a higher low on the DXY would be a significant divergence for me if we follow through with market structure, breaking structure to the higher side. But until then, we can't see. One interesting thing is I had a bullish bias for this week, at least a bullish retracement bias for this week, but the price action has been so messy. I have actually not significantly engaged price. I'm still waiting to see what we have today after the high impact event, and then maybe on Friday I will engage price. So until then, this is where we stand. This has been a very, very slow week, which is expected of the price after this kind of impulses that we had the last 2 weeks. So it is expected that we have this kind of slow movement. Now, this is what leads to that exhaustive price action that I am expecting. So after this week, we would know how price will go forward. Are we going to tank, or are we going to have something to show us that we are due for a deeper retracement before we actually continue the trend as we expect? Now, if we look at the 5-year bond yield, like I said during the market outlook, I want to see some exhaustive price action. I want to see price range and fail to make new significant lows with this type of impulses. And then I want to see something exhaustive. Like I said, 3 drive pattern, significant swing high or swing low, in this case, a significant swing low or a significant divergence between the 5-year bond yield, the 10-year bond yield, and the 30-year bond yield. So far, we've had a consolidation, which is a good sign that we are exhausting this bearish momentum. However, there's been no significant exhaustive pattern to show me that, okay, we are now ready to take price higher. Let's look at the correlation between this 5-year bond yield, the 10-year bond yield, and the 30-year bond yield. So if you see over here what I was trying to point out, we've not had any significant 3 drive pattern, none. We've not had any significant swing lows. Now you can call this a swing low. This is a swing low, but I'm not going to trade off this swing low alone because we are still very, very bearish and no significant high has been broken. No divergence at all. We're still maintaining symmetry. That also is one of the reasons I cannot take a bullish stance yet, because to the best of my knowledge, we are still bearish. The only divergence that is worth noting, which I want to see how price would respect going into the end of the week, is this divergence between this high, this high, this high, and this high. Now the crack in correlation comes in the 30-year bond yield. On the 30-year bond yield, this high is higher than this high, but on the 10-year and 5-year bond yield, this high is lower than the following high. Let me quickly mark that out so you get what I'm saying. This is the kind of divergence we have here. This was Monday, going into Tuesday. We've had lower prices since then, but do we continue with the lower prices towards the end of the week? We'll have to wait and see. This is the divergence I'm talking about. Higher high, lower high here. Going into the end of the week, I would like to see what today, Thursday, closes as and what Friday prints for the week. And then we'll look at it again in our market outlook at the end of the week to determine the stance we should take going forward on the dollar and other related currencies that we discuss. That being said, I look forward to seeing you at the end of the week as we have our market recap and discuss what price has done throughout this week. If you watched to this point of the video, leave a thumbs up. Subscribe if you haven't, because why not? Share this video with anyone who you believe would find value in this video. And until next time, stay safe, trade safe. See you in the next video. Take care.